Against a backdrop of rising geopolitical risks and macroeconomic uncertainty, Argo Infrastructure grew its full-year profit to $52.2 million for the 2025 financial year. This result was driven by increased realised gains in the portfolio and the strong performance of global listed infrastructure, which provided a bastion of stability amid periods of considerable volatility. Delivering on our continuing commitment to provide steady and sustainable returns to our shareholders, full-year dividends were increased by 5.6% to 9.5 cents per share, fully franked, and another record high for Argo Infrastructure. Notably, both the interim dividend of 4 cents per share and the final dividend of 5.5 cents per share represent record high levels. Total dividends paid to our shareholders since the company was founded just over a decade ago now equals 67.25 cents per share. Furthermore, the last 15 consecutive dividends paid to shareholders have been fully franked. This underscores a significant benefit of Argo Infrastructure's listed investment company structure, namely our ability to generate franking credits for our shareholders because we pay Australian corporate tax. This is a unique advantage which differentiates us from investing in offshore assets via other managed investments such as trusts or directly. Despite considerable volatility on global markets, particularly in the second half, Argo Infrastructure's global portfolio of infrastructure stocks delivered a total return of 19.9% for the 2025 financial year. The outperformance of the portfolio relative to the broader domestic equities market was 13.8%, underscores its diversification benefits for Australian investors. Global listed infrastructure demonstrated great resilience through the significant market turbulence during the period, particularly following US President Trump's tariff announcements in early April. While broader equity markets, both locally and globally, fell precipitously in response, infrastructure stocks held up comparatively well, highlighting their defensive characteristics. Against a backdrop of heightened global trade tensions, the asset class proved particularly attractive to investors, given most infrastructure assets are highly localised businesses, not import-export dependent, that provide services essential for day-to-day functioning of the economies in which they operate. While most ASX-listed investment companies are trading at historically large share price discounts to net tangible assets per share, we are pleased that Argo Infrastructure's discount has narrowed in recent months. We believe this reflects both the strong performance and attractive attributes of the asset class, together with our track record of delivering increasingly fully franked dividends over many years. While we are encouraged by this narrowing trend, we are not resting on our laurels. We remain focused on ensuring Argo Infrastructure's share price better reflects the underlying value of the assets and continues to take a range of proactive measures, including various marketing and engagement initiatives with existing and prospective shareholders. These measures also include buying the shares required for the allocation to participants in the dividend reinvestment plan and the dividend substitution plan on market rather than issuing new shares at a discount to NTA. Furthermore, Argo Infrastructure has on-market buyback facility in place to be used when deemed appropriate. In July, we celebrated the 10th anniversary of Argo Infrastructure's listing on the Australian Securities Exchange, or the ASX. At the time, it was the largest initial public offering of an LIC on the ASX, raising $286 million and attracting approximately 9,000 shareholders. To this day, we remain the only Australian LIC providing investors with exposure to global listed infrastructure, and the only way for Australian investors to access this asset class with the added benefit of fully franked dividends. Elevated geopolitical tensions and macroeconomic challenges mean market conditions do remain uncertain. Although the extreme tariff-led volatility seems to have largely eased for now, tensions continue to simmer and could flare up seemingly at any time. With this in mind, I remind shareholders that during periods of heightened volatility and uncertainty, global infrastructure stocks are particularly attractive to investors as they tend to offer relative stability and predictable cash flows. I also remind shareholders that Argo Infrastructure's portfolio manager, Cohen & Steers, takes an active approach, operating in a large and highly liquid investment universe. This positions them to identify and rapidly capitalise on short-term opportunities created by heightened uncertainty and volatility. Longer term, we believe the outlook for global listed infrastructure remains positive, underpinned by strong structural growth drivers. These include surging energy demand to power the burgeoning data centre industry, which is supporting the AI revolution, and more broadly, the digitalisation of the global economy. Argo Infrastructure has $485 million in assets, no debt, and a global portfolio of major listed infrastructure companies, managed by one of the world's leading managers in the asset class. I would like to conclude by thanking our Managing Director, Jason Beddow, and the team for their ongoing hard work over the year. I also thank Argo Infrastructure Specialist Portfolio Manager, Cohen & Steers. Thank you to my fellow board members for their valuable contributions over the last year. On behalf of the board, I also wish to thank Mr. Russell Higgins AO, who announced his decision to retire as chairman at last year's AGM. Russell was Argo Infrastructure's chairman over his 7 years on the board, during which time the company established a track record of delivering fully franked dividends to our shareholders. Finally, I sincerely thank our loyal shareholders for their ongoing support and extend a warm welcome to any new shareholders who have joined Argo Infrastructure in the last year.